This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past several months, the U.S. housing market has been under pressure from high mortgage rates and limited supply. Home prices stayed relatively firm despite reduced affordability, mainly because fewer homeowners were willing to sell. At the same time, demand cooled as borrowing costs rose, creating a slower but still tight market. This week, the latest housing data showed signs of stabilization rather than a clear decline. Home prices in many areas remained steady, with only slight softening in certain regions. Mortgage rates stayed elevated, continuing to limit how much buyers can afford. At the same time, new listings increased slightly, giving buyers a bit more choice than in previous months. However, overall inventory is still below historical averages, which continues to support home prices even as demand cools. So what's the real trend right now? The housing market is moving sideways. Prices are no longer rising rapidly, but they're also not dropping significantly. High borrowing costs are slowing activity, while limited supply is preventing major price declines. This week reinforces a balanced but tight trend. Buyers are more cautious, sellers are holding firm, and the market is adjusting without a sharp correction. So how does this hit your money? For buyers, affordability remains the biggest challenge. Monthly mortgage payments are still high due to elevated interest rates, even if home prices aren't rising as quickly. For homeowners, this means property values are holding relatively steady, but refinancing opportunities remain limited because rates are still high. For renters, the impact is mixed. Rent growth has slowed in some areas, but overall costs remain elevated compared to previous years. In practical terms, housing costs are not falling sharply. They're stabilizing at a higher level, which continues to affect monthly budgets. Looking ahead to next week, markets will be watching for new data on home sales and mortgage applications. These indicators will help show whether buyer activity is picking up or continuing to slow under the pressure of high rates. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.